The threat of a new global economic recession has been looming. No one is quite sure what shape it will take, what sectors it will affect, or what will be the driving catalyst, but the fog is starting to clear and shapes are emerging that look to be in the mold of energy companies. Will Bitcoin be dragged down alongside an energy collapse or help to mitigate the damages? The current global financial situation is incredibly uncertain. COVID-19 is ravaging economies around the world and sending markets into a panic. However, this may well just be a red herring placed on top of an already precarious market situation. Across the world, central banks have been implementing policies to try and prop up waning economies to a point it has almost become unsustainable. In the US, the Federal Reserve has been printing money to a point where its involvement in the economy's continued success looks to be a ticking time bomb. China has not been shy to create money out of nothing, and the European Central Bank also turned dovish some time ago. As the economy waits on rickety stilts for something to crack the foundation, energy companies seem to be approaching their own devastating bubble. Yesterday, oil prices dropped 20% after an OPEC deal failure sparked a price war. CBE This could signal the bursting of a bubble predicated on shale energy. Forbes' Jesse Colombo, an economic analyst, is predicting another economic collapse very similar to what was seen in 2008 and has even likened the current situation to the movie, based on true events, The Big Short. For those of a cryptocurrency leaning, the calls will be that Bitcoin was created out of an economic crisis just for such another economic crisis. However, despite the coin being over 10 years old and predicated as a hedge against centralized economic ruin, Bitcoin seems far from ready to offer economic salvation. Shale and tech bubbles ready to burst. In June of last year, Colombo showed how the New York Fed's recession probability model was indicating that there is a 30% probability of a recession in the next 12 months. Less than 12 months later, the model has increased to 40%. With this recession threat growing, the next question to ask is what will be the catalyst that sets off the recession, and how dramatic and influential will it be? Currently, there are two very obvious bubbles that have been building: the shale energy bubble and the tech bubble. The Bloomberg U.S. startup barometer is plunging, //T. Or rather /T, the startup bubble is bursting, which is the scenario I warned about last year, /T. Or rather /gigak fefet message $kex $finpic, Twitter.com/axnpia Jesse Colombo, at the bubble, February 17, 2020. Looking first at the tech bubble, Colombo is of the opinion that this bubble is ripe to pop based on the Massachusetts stimulus of the tech market, which makes these startups not economically viable. Colombo likens them to China's ghost cities. Like China's grandiose infrastructure projects and ghost cities, the majority of today's tech startups only exist, at least at their current scale, because of stimulus, and are not economically viable, as evidenced by the billions of dollars they are hemorrhaging with no end in sight. Last year I excoriated the X. You can read full post on Cryptophans News, link available in text below.